Hi, this is the Jurong Railway. It was built in 1966. So one fun fact about this place is that this is where I do my early morning run, my 5 a.m. run. So if you want to see me, you can join me at 5 a.m. run every couple of days. So this area actually spans about 7 kilometers, one round around here, and I do this run because I think it keeps me thinking when I do this run, things about investing, things about life, and how I can become a better person.
In this series, we hear stories about how people started their investing journey. Click subscribe to stay updated to more interviews like this. Stephen,
Hi.
what should we know about you?
Hi. I am 40 this year. I've been working about 20 years as an engineer. So I have 2 kids.
Can you tell us how did your journey with investing begin?
Okay, so I started buying stock somewhere in 2006-07. So that was just before the global financial crisis. Then thereafter, I think that was more of a, I would say more of a gambling than an investing mindset, because I was hoping that, if I buy this and the next couple of days it goes up by 20-30% and I sell it off. So of course that was a lesson that I learned over that couple of years from '06 to about '09, where the market crashed. So thereafter, I was actually busy with life, family, housing, kids, and all that. So somewhere around 2018-19, I decided that I need to do something to increase my knowledge, and I signed up for a course, investment course, and that from that actually I learned how to do proper financial reading, financial statement reading, and how to analyze company, and so that was in 1819, and during that few years, I got to know this guy. Let's call him YS, because I don't know whether he's gonna be known. So actually, this YS actually he taught me a lot of things during that 1 year, 6 months to a year, and he's practically a mentor to him. So thank you YS if you are watching this, and he basically compressed what are the mistakes that a beginner investor will make in let's say the first few years into probably about a year. So I literally compressed everything to a year, and that actually helped me to um, kickstart my whole investing process. And also, I think that is something that is very important to everyone, to have someone to guide you when you are just starting out, because you can actually save a lot of time and money throughout your life, really just life or investing in general. Yeah.
How do you find someone like that? For most people, when they begin investing nowadays,
Mhm.
they go look at YouTube channels, blogs, but it's nice to have someone that you can actually meet and see who
Yes.
guides you.
Yes. So actually, when I started investing like 1718, there wasn't so much YouTube content, even fin tweet in Twitter and all that. So it was more like a um, opportunity. So you have networking and all that. But as this couple of years since the pandemic, I think you can see that a lot of YouTubers coming on, and some of them really provide very good content that you actually can learn instead of going to like traditional courses like um, finance courses and 3 years finance courses. So that actually helps. So going back to your question, so when I signed up for the course, I also volunteered for this mastermind session. So we'll meet up to analyze companies together. So he's one of the coaches there who actually guided us on how to analyze companies. And I think beyond his scope, actually he also guided me on certain concepts, because I think that investing is more of a mindset thing, like 80% mindset thing than about 20%, let's say, of technical knowledge. So I think that part he tuned me quite a bit. So I always challenge his thoughts and then try to learn from him. I think that is important in many aspects of things, many aspects of life that we do nowadays, because I think um, things change very fast nowadays. Even the technology begin today. If you go like 3 years later, it'll be maybe totally obsolete.
Yes.
So I think that is one thing that you have to learn, to unlearn and to learn, and the willingness to be better uh, than yourself yesterday. Let's say 1% better than yourself today, and that compounding will be a very huge difference from what you are maybe a year ago.
You've grown a lot since you started investing 15 years ago, where it started more of a trading mindset. Let's look at quicker gains.
Mm.
And as you evolved, what is your current investing philosophy?
Okay, so my current philosophy will be more towards like long-term investing. So when I buy a particular uh, a stock, I wouldn't look at the stock price. you need to look behind the stock price, which is the business at it. So is the business doing well? Because ultimately, I don't look at that 10-20%. It might sounds a bit arrogant whereby I don't look at 10-20%, but actually investing itself, it should be long term, and you should look at multi-baggers, what Peter Lynch actually shared in his book. And you should look at multi-baggers, and that would actually create a compounding effect over time and create generation wealth, hopefully for my kids in the future. So that would actually be more that would be more of my current mindset right now. And so that would be like a buy and hold. And but also I will not forget, because some will buy and forget, but I will buy and hold and monitor throughout, maybe quarterly, and maybe a couple of weeks or quarter, depending on the company. So if the company is a very stable big tech company, right, I think it's pretty stable. But if you're looking at high growth stock whereby they are still they are still cash burning and they're not profitable, I think we have to pay more attention to that, maybe on a weekly basis or a couple of months monthly basis. Yep.
It's quite a big transition from trading to long-term investing, but not just buying and passively holding, but still paying attention to a company's fundamentals.
Yep.
And you believe that in the long term, the stock price will follow the company's fundamentals.
Yes. So I think that is the basis that any investor has to understand, because of the concept of mean reversion. So I think basically I can classify this under two categories. So one is like, a lot of people talk about value stock and growth stock. So for value stock, I think we have to buy it when it's undervalued, and we can or might not sell it when it's overvalued. But for growth stock, I think most of the newer generation are more towards growth stock than value stock. Not saying that which one is better, which one is worse, but I think both has their own pros and cons. But I think for growth stock, we do really need to monitor the growth rate of the company and see whether is it growing. So I think the investment thesis, right, before you buy a company, is very important. So when the thesis change, you have to make a decision whether to sell out or to hold, and not by the fluctuation of the price. Because I think the volatility is not the risk. The risk is not knowing, understanding more of a company, or the investor company, or not understanding more of your needs and your emotions. Yeah.
So you talk a lot about mindset. It's not just the numbers or what you see in the annual report. That's 20% of it to you. 80% of it is a mindset. What's your biggest learning as an investor so far in recent years?
Okay, so I would say luckily I invested before the COVID crash. So why do I say that? During the COVID crash, I think my whole portfolio dropped about 50%. So I didn't sell any, I held them throughout. So that process, although it's a short one, about a month or so before it recovers, but that month was very memorable because it gives me something that money cannot give. That is experience. So when you see your portfolio crash by 50% and you kind of like beginning to as a beginner investor, you realize that a lot of things. So a couple of things. So firstly, I understand one, never time the market, because I think, in my opinion, no one can successfully time the market. If you look at the, let's say, top 10 or top 20 richest person, right, or successful person, right, there is no trader there. There is either a long-term investor or a businessman like, Warren Buffett, Elon Musk. They all host businesses or are long-term investors. So that is number one. Do not time the market, in my opinion. The second one will be actually from the COVID crash too as well, is that the market is not the economy. So the economy can crash, but the market can go up. So there can be a disconnect to there. That's evident because during the COVID, everybody's locked down, but the market recovered after a month or so. So that is the second learning point I learned from the COVID-19 crash. And the third one, I think, would be understand the business and to build that conviction. So what I mean by that is like, if you do not understand the business well, you will not have the conviction and the so-called courage to average in, be it average up or average down to your counter, which I think this is important because when we buy a business, at least for retail investor like us, we do not like one whole lump sum throw inside. In my opinion, we should actually do it over a period whereby we build our conviction and the money, let's say we are working and then every month we'll pump in a little bit of money. So I think that is where we can do we can take advantage of the compounding effect, because I think the compounding effect is something that a lot of people cannot understand, because our brain is actually wired for linear thinking. So for compounding, in the initial part, you can see, if you can actually plot the graph, it's actually slow. It's like exponentially going up. But at the initial part, right, the linear part is actually higher than the exponential part till there's an inflection point. And at that point, you will see it's exponential. So that is why a lot of investors, including myself, took a while to understand this.
With your current philosophy and what you've learned so far, tell us more about your current investment portfolio. Stocks, crypto, NFT, bonds, real estate. What is it like?
Okay, for my portfolio, my crypto, I think it stands about, say, less than 3% of the total portfolio. I don't hold bonds. For stocks, okay, so for stocks, right, there's this crash in November last year. So prior to that, actually, I hold about maybe about 15 stocks somewhere at the start of 2021, thereabout. So when the crash came, and when I understand the effect of understanding the business well, then thereafter I moved towards concentrating into higher conviction businesses. So basically, I focus everything, I sell everything and focus into 2 or 3 counters or 2 or 3 position, and then to understand them well. Because during the COVID crash, right, I helped maybe about 15 to 20 companies, but I realized when it crashed, I do not know what to do. Because firstly, I don't have so much funds to actually buy like 15 companies at a shot. So that got me thinking. And the other part is that even if I have the cash, which should I deploy first? So I realized that it's very important to have conviction and to not to have an overly diversified portfolio. I think Warren Buffett did share that diversification are for birds or for idiots. I can't remember the exact phrase, but I think it has to be taken in context as well. Although I do agree, but you have to have the correct mindset to do that, to concentrate your portfolio, because it is not easy to have a concentrated portfolio where it can fluctuate. The volatility is very, very high, and it can fluctuate like 10-20% a day. It can drop like 50% over a week. So I think the important thing, or the crux, is to be able to sleep soundly at night. So if you can't sleep soundly at night, that means you have either taken too much risk, or you do not understand the company well enough to do that.
I think that sounds like helpful perspectives for investors. What's one tip you'd have for new investors, especially those starting out now? This sounds like a very scary time to be a retail investor.
Yes. So actually, this is the best time, in my opinion, to invest, because we are in a kind of like almost a bear market. So S&P dropped to about 19%. So we are almost there. Bear market is about 20%. So we're almost there. So whether it will drop more or it will recover, I don't know. And I don't think anybody can say 100% that he or she knows. Maybe it's more of a probabilistic way of looking at it. Maybe through technical or through price action they can tell, but it's more probabilistic way. So I think this way, or rather the advice will be to get started and then start small. So when you build that position over time, and as if you are working, getting a monthly salary, you can slowly put in more and more as you gain more experience, because experience is something that nobody can give you, and that's something that money can't buy. So that it comes with a bear market especially, and this is a great time to invest in a bear market if you know what to invest and you're investing in good companies. So for a start, you should look at companies with strong balance sheet. So for example, high cash, no debt, or low debt, and with insane demand, and with a growing and a huge total addressable market, and with a lot of tailwinds. So that will actually build up your confidence and your conviction over time, and slowly average in. Do not, I mean, in my opinion, do not just throw one lump sum and then just forget about it. You have to monitor your investment over time. Yeah.
Thank you for the advice, Stephen. Anyone who's thinking about the world of investing, there are many different ways of entry, and many people have different experiences. For Stephen has been doing this for 15 years. His philosophy has changed a lot. Some people on this channel will be new investors. Some will be like Stephen, or those who've even invested for decades. We hope you found these perspectives useful. Again, in this series, we focus more on the how, and not the what. It doesn't matter what specific stocks Steven invests in. What we want to hear is the stories behind where they got to where they are today. If you found this video useful, please click the like button. Hit subscribe to stay updated to more interviews like this. Take care.
Bye.